Hey, good morning, everybody. This is Bob with Trade Genius. It's the 10th of August already. Where's summer gone? Hey, I want to talk to you about an indicator that we created with alerts and a trade that we take that I think you would really like. And if you combine it with our indicator, it's so far in 2019, it's pretty much batting 1,000. And this is an opportunity for you to take a trade that is on the same side as the bankers. And this is volatility. And there are a couple of ETFs, three that I know for sure, that have what's called a bearish bias built into them that you can measure using money flow and then look for those extremes which provide reversals, which provides profit. And so the first one I want to talk to you about is the VIX contract, but it's the VXX ETF. You can use UVXY if you want more leverage, or you could do VXX call credit spreads if you want to have a little bit less um, aggressive kind of approach to capturing profit. And then so we created an indicator called buy pressure, sell pressure. It's a invite only for our subscribers, and for those who are subscribing that are listening, will be available September 1st. I may do one or two more tweaks to it, and to just make it even a better indicator. But it's right now it's good enough, and it serves its purpose, and it will provide you with money making opportunities. And essentially, what it does is this works off a 4 hour indicator, and the buy sell pressure is displays when you see these peaks in extreme moves of volatility. And why this works is that volatility is kind of like dynamic insurance, where traders will put on protective hedges, but they're expensive. So as soon as they either close their position that they hedged, or they deem that the crisis has passed, they'll drop their hedge and capture that profit and then maintain their position. But you just can't keep these on forever, because they don't tend to be counterproductive for the the owner of the hedge. So you get these spikes, and then they drift down, and that's where you capture your profit. So we did the work here for you, and if you look, this is just 2019, but I've been trading these things for years. It's really consistent, and don't worry about if the market starts to go crazy. This will become even more profitable. You just have to be a little bit quicker. And so this is not going away unless they get rid of VXX and they get rid of UVXY and they get rid of SVXY. And until they do, we could profit from it. And so all we look for is these sell pressures, and then you could hold the trade until one or two things. You get a buy pressure signal, or you just flip over to the VIX and you just kind of watch the if it's falling or rising as just a courtesy tool, or you watch the stochastics as well. That'll give you a hint too. If it gets oversold and starts to come back up, you may want to bail out if you don't already see a buy pressure situation. So I've had these coded to look at the extremes outside these bands of linear regression. So I'm not interested in anything internally, and we can control that because we made it dynamic. And right here is you can determine how many signals you want. So for example, if I said there's just no filter on it, see, you get 1 billion of these hits, right? So, and if you do like I do, I'm looking out. I like to be outside the bands, and so I do this. And that way I can just look for the best opportunities. And you may miss some, like you miss it here, but then I put a secondary signal in here and an alert. So if the money flow gets up to the 70 and crosses back down, then I'm going to want to know about it and determine if I want to take the trade or not. So I would look at the VIX, see if the VIX is falling, and this is going, then I may take that trade. But if not, okay, so what if I miss it? And then so here there's been 5 trades. They're all winners, and you can just develop nice profits off these things. And each one of these things would you basically double your investment, okay? Because you're using options. And the way I like to do it is like to go 2 weeks out, 10% down on the strike. So if it was hitting at, for this example, here was up at 51, I'd be buying the 45 puts, and I'd be going out 2 weeks. And in this case, it would have blown right into the money, and you would have made a lot more than twice the income, okay? And then, if you'd have took this spike down, you'd have doubled. This spike down, you'd have doubled. This spike down, you'd have doubled. This spike down here probably would be pretty close to just a small profit. And then this one here, I'm in right now, and it's been a profitable trade. So, and I'm still in it. And so you just take a look at these and just let them pop up. But it's not the only one that works. It's also works for UNG as well. And UNG is a nice trade. And the only change I make on UNG is that I buy it at the money. And so I'm sharing these things now with you as my subscribers to these are good option plays. There's relatively on the safe side because of just the nature of the instrument, and it's a good way for you to learn how to trade options. You always want to put, options. You always want to have the best edge because they're highly leveraged. But in these cases here, the futures markets push things into your benefit. And the other one that I know works on a consistent basis is DBA. All right, and so it doesn't move as much, but there's definitely opportunities to trade those as well. And so I just want to share that with you guys. So if you're going to be a subscriber of ours, we have specials running now, and then this will be available for sure September 1st, and this alone will pay for our service many times over lifetime. And as long as you're a member, you're going to have access to the buy sell pressure indicator. And so I'm pretty pumped that I was able to get this to you guys and give you guys a good tool. And the more volatile the market gets, the more profitable this trade is going to be. And so and one last thing too. So you can just set this up as a template. So I call it volatility. That way, if you're trading other things, this thing doesn't pop up on every darn one of them. You could just set up your chart settings can be different for different time frames, and also for different instruments. So you can just set up a series of templates. If you like to, trade SPY, you may want to use a different template than you trade VXX, and then that way you're not getting confused as to why this isn't working for something else. I designed this specifically for futures trading and for trading these contango or these bias-based ETFs, to the bearish side. Anyway, thanks so much for listening. TradeLikeAGenius.com. Take advantage of it, because after September, it's going to be an add-on service. Bye-bye.